Let's now see the Ask Weekend Investing round questions. Another reminder to do like and share these videos and subscribe to the channel. 800 queries have been answered across 50 rounds so far. All the videos are there in the links. You can watch them at leisure and gain some more knowledge. Prashant has the next question. Can you share with us which investing style will work in what type of markets? Why style of investing does a volatile, uncertain market like today's suit? So one thing I can tell you very clearly, when markets are going down, no style is making money. In the initial phases of markets coming from down from a top, momentum will not do well. Uh, Perhaps others may do slightly better. When you are having a long trending move upwards, momentum cannot be beaten by other strategies. When there is absolute sort of mayhem, uh, possibly in that, if there's a very deep crisis, momentum again will do better. It will either go to cash or it will go to the defensive stocks in the index. So that's the sort of style variation that I can think of. To my mind, momentum investing perhaps is the best of all investing styles. And I'm biased, and uh, you can say that I'm not being fair here, but from my experience of 30 years, I can tell you this is the easiest way to ride the markets. Easiest way. It is very easy on your heart. It is very easy on your sleep. It doesn't keep you confused. It does what is being shown in front of you. So there is no guessing, there is no probability, you know, calculation, there is no forecasting, there is no shooting in the dark. Markets going up, you are buying. Markets coming down, you are selling, and that's the name of the game. So both has the next one. Does tax harvesting result in discontinuation of compounding process in any way? So tax harvesting can have some implications to the extent that if you are going to be paying some tax, that much money has gone out uh, from your kitty, and if the resulting reinvestment is of a lesser amount, so that much amount of compounding goes away. The other aspect is that, let's say something has just become long-term capital gains in your account, has been, let's say, 13 months, and you're doing tax harvesting on that, and then 3 months later, if you have to anyways sell it, it will become a short-term capital gain for you. Had you not done anything, the entire thing would have been long-term capital gain. So it depends upon situation to situation. My sense is that, don't, unless there is a meteor harvest that is happening, don't unnecessarily incur additional transaction cost and make your longer bets shorter, unless you can really see a big advantage in doing that. For very small amounts, perhaps not so desirable. Next one is from Abhishek. Already subscribed to ATH MI20. Recently subscribed to Evergreen. Since minimum amount to enter is on the higher side, can I customize the small case and enter and then slowly get back to the original weightage? I would recommend that maybe you can wait for some time. You can get in touch with the support. They will, perhaps they can help you, uh, you know, f- stop your subscription for some time till you are able to gather the minimum amount and go on with it. uh, the situation of not having enough capital but subscribing to a strategy is not a very good strategy, I would say, overall. So only subscribe to strategies where you have some visibility of the capital that you're going to deploy. But in any case, if you need help, get in touch with us. I would not recommend trying to do this maneuver of buying few stocks and then later on adding weightage. Is avoidable. Rajesh says, in your discussion with a lot of weekend investors, have you come across any way to generate alpha over weekend investing strategies? It is understood that one might have to allocate some more time to generate the same. So some folks use some sort of moving averages on top of the strategy index. So let's say the strategy index is plotted, and that information is available on small case also and on our um, uh, I think it is there on the Weekend Investing Hub. Um, and that data series is available each day. What is the index series? And you can plot, some moving averages and maybe create some additional rules that I will get out or I will add more money in if XYZ happens. It is not desirable for me to recommend that because it basically is creating a extremely active strategy which was not supposed to be so active. The strategy is geared towards mostly folks who don't want to deal with the market every hour and every day, and who will just come and do a single click every week or every month, as the case may be, and get on with their careers and businesses and so on and so forth. So over sort of you know making that active is not something that I recommend. But if you find ways of generating alpha over weekend investing strategies, I mean, that's then up to you how you wish to do that. But we cannot recommend how you should tweak that to get some additional points. Nitin says, I was never able to develop conviction to continue SIPs during correction for a very long period of time, but something changed recently. And I found myself comfortably sipping my way through a correction and realized that this has to do majorly with having conviction with the strategy and not particularly with overall markets. Yes, that is absolutely right. If you are having it's like you are riding in a bus. If you have the conviction that the driver is a safe driver, he knows what he's doing, and he will get you to the destination, you will be able to sleep in the bus. If your thought process is that this driver is going to ruin my journey and perhaps get me into the hospital, you will not be able to sleep one week. So it is all about comfort with the strategy, uh, with the manager, and confidence of what has been achieved in the past. That should be driving your conviction. So it will take time for every investor to come to this point. But and I also want to add here that, like I mentioned a couple of days ago, any investor who is less than 40 years of age has not really seen a real bear market. So all those youngsters out there, I'm sorry to say, but I mean, you are living in a market scenario which is very easy. Since 2009, so basically after the GFC, there has hardly been any major correction for any long period of time. Only the COVID crisis comes to mind, where 30-35% drop was there for 1 month. It was back within 2 or 3 months that to the same place. If you go back into the 90s and 2000s, you will find there were bear markets running for years together. So conviction during that kind of a environment versus conviction within having seen that markets only go down for a few weeks is very, very different. But uh, I just wanted to bring this up. Nikhil says, offbeat question, do you think one should move towards conservative strategies if you're planning to take a break from your job? I would say it would depend upon your situation, and this is best discussed with your financial advisor. How much risk you can take is that measure that he or she will be able to tell you better. That if you are taking risk on equities, are you reasonably safe in case things go south? Um, but if you are disrupting your regular income, an obvious sort of situation would be that yes, please be a little more conservative, because you don't know what if the mother of bear markets comes to us, and it impacts what you thought would happen in 1, 2, 3, 4 years. So from that point of view, yes, and it is easier on the mind also. I mean, if you are in a very aggressive strategy and things go south, it may not even help you do other things that you may be planning to do. Maybe you are going to set up a business, maybe you are going to look for another job. So any stress from here probably is going to impact what activity you are going to do. I mean, if you even if you are just taking a break and relaxing, that relaxation will not happen. So although it is a very unique sort of a situation depending on person to person, but if you were to ask me, I mean, I anyway run a very conservative strategy. These are all conservative strategies. The only aggressiveness that people add to it is putting 100%, 80% into that. If you do proper allocation, and as per your need, if you're I mean, if my allocation to equity is nowhere near where a lot of users put their equity allocation. So you can make yourself conservative if you want to. If you want to be aggressive, of course, I mean, there's no harm in that as well. Vinod says, could you please take the small suggestion to small case team? Many times we need to open small case to check or rebalance our portfolios while in public place. Hence, it is better to mask blur the overall net worth amount at entire account level and at individual small case level and provide an option mask and unmask the number. Okay, it's a good suggestion. I will certainly let small case team know. I would also request you to drop us a mail with the same message so that we can make sure that it reaches them. Um, and congratulations for having big numbers in your small case. Uh, Ivesh, I hope I'm taking your name rightly. I'm currently invested 10 lakhs in Evergreen small case. Would you suggest me to increase the allocation more here slowly as I have a 20,000 SIP in this, or should I buy another one of the weekend investing small cases to diversify? And if so, which one should I be looking at for time horizon of 7 to 10 years? So 10 lakhs in Evergreen small case is basically nowhere near the allocated limit. So you can keep increasing your investments here at some other point where you feel that you are reaching. Uh, so and once you are beyond a certain point, and you want to more diversify more, then look for, I think, more options. Right now you should be good with this. Shushan says, I use Zerodha Demat for my small case account. Can I pledge my holdings in small case and use the margin money to trade in FNO? So in terms of, can you do? Yes, you can do. It is your account, it is your holdings. uh, you are free to do what you wish to do, and the Zerodha Demat will allow you to do this because the stock is unhindered, unpledged holding in small case. But do make sure that whenever we rebalance and the stock needs to go, then the stock should be available for that purpose. um, I have not met many people who have been able to do this successfully, where you pledge your medium term, short to medium term holdings and trade in FNO. First of all, trading in FNO itself is a 91% losing game as per official stats. So, uh, if the other game is 91% success and this one is 91% loss, where would you want to go? That's a question you need to answer. Soyal says, thanks for the content you present. Thank you so much. When we look at asset allocation, equity and debt mutual funds already counterbalance each other to manage risk and returns. We also have products like NPS and PPF that add stability. In this context, what is the real role of gold or silver in an investment portfolio? Why should we allocate to gold if over the long term equity is anyway expected to average out and deliver strong returns? So gold is never competing for returns. Let this be very clear to all the viewers that you're not buying gold for returns. You are buying gold for insurance. Today, our country is stable, our currency is reasonably stable. Tomorrow, we may have leadership in the country which may take our country to another poor situation. Our currency may go for a toss. At that point of time, systems will start to break down. Perhaps you may not get paid the NPS pension that has been added up. Like in the US, they are talking about that Social Security is not confirmed whether everybody will get it because there's no money. So all those risks are there for the currency and for the sovereign nation. Gold is that only insurance that you have, which is globally priced, and it does not matter where your currency is. So people in Argentina, Turkey, even Japan, all these folks, despite volatile currency, have been able to do well because they were holding gold. And gold has no relation to your local currency; it is globally priced. So it's a great asset allocator away from the usual suspects. And you can keep the equity and debt mutual funds and perhaps real estate, etc., etc. But also keep insurance into gold is what the thesis that I would like to uh, claim. So we've come to the last end of the Ask Weekend Investing round. Sorry if I've not been able to take up your query today. We'll take it up next time. Do go through all the previous episodes. The links are there in the description. Do subscribe to the channel. Once again, this is a request to like and share these videos. Please make our YouTube channel, reach more friends and family accounts that you have on your WhatsApp groups. And I will see you next week. Thank you. Bye bye.